Earnings season may be done, but there's still a lot of hot stocks reporting this week. So maybe we're getting a little mini earnings season for this week before the holiday comes in. But either way, I'm here to cover the hottest ones going this week, and we got some pretty charts. So let's get right to it. The first one I'm covering about middle of this week is Accenture. Now this is a great chart. This is the consulting firm. They only have the 3 misses, and they put together a nice little track record here the last 5 quarters in a row. Shares at this new high, like a lot of things right now. So this is one to watch, just to see if they're going to keep beating here. If you're playing the beat and miss, this is one you should keep on your radar. Then we're going to get into the travel area, which has also been another hot area. As you can see, really hot here. They only had the one miss, Carnival Cruise Liners, back in 2012. And then since late last year, these shares have really taken off. Fuel prices remain low, so that's really helping. And also, just as the global economy heats up, and especially the U.S. economy, people want to travel, and travel has been really popular. So the numbers have been real good out of Carnival. This is definitely one to watch if you're interested in the travel side of things. Then we're going to get Cenex. I think that's how you pronounce it. I think I reported on these guys last quarter as well because they got this great track record. They just have the one miss. Shares are off the highs here. They are a tech company on the tech side, so got a little bit of weakness there. But if you playing, again, the beat and the miss, this is one of the best going this week. They're very, very consistent. Then we're going to have the restaurant side. Now, this is a little more challenging. Sonic, they've had the great growth a couple of years ago, and they just have the 2 misses. So they do have a great track record, but I'm going to be watching these same-store sales and their comparables to see how it's going on the burger side. Again, they had the really great growth there, and it's kind of slowed down quite a bit. And the restaurant sector, people are a little nervous about. So you can see they're trading, just kind of treading water here the last couple of years. We'll see if, another beat, if they get one, gives the stock some boost. But it's really not about the beat and the miss with the restaurants. It's about those comps. And then I put one that's not so pretty, BlackBerry, on here, even though they have put together a great 6-quarter streaks. Those big green arrows indicate big beats here. Shares are well off those lows finally, mainly due to some bullishness that Citron and others think that BlackBerry could be the next NVIDIA, that they have AI technology that's going to be adopted industry-wide. So a lot of people buying into this story, and it'll be something to watch this quarter. But you got to admit, they put together this nice streak, so we'll kind of see where it takes it from here. But a lot of people are going to be watching this chart, even though it's certainly not the prettiest one of the week. So remember, just because a stock has beat for numerous quarters or maybe even 5 years in a row doesn't mean they're always going to do it. Past performance is no guarantee going into the future, but if a company does put together a solid track record, I kind of like the odds going forward. So I like to play those earnings beats and misses. If you're interested in playing the options, my colleague Dave Bartosiak will be covering those on Zacks Live Trader over on YouTube. So if you're interested in that, go check out over there because he's got to cover some of these hottest earnings charts for this week and every week over on Zacks Live Trader. I'll be bringing you whatever good earnings charts I can as we go forward, but it's going to be kind of quiet until the earnings season ramps up again. But you never know when you might get a hot week like we did this week. So be sure to tune in because there's a lot going on with earnings this week.